Bitcoin is going to be, one of the most valuable assets along with Ethereum, in 5-10 years from now. It's going to be, my projection is 500,000 per coin is in Bitcoin within the next 5 years, probably 10 at the most.
Welcome to the LandLife Podcast with your host, PJ Riley.
Hey guys, welcome to the LandLife Podcast. Guys, today we got such an explosive guest, such an accomplished guest that I'm going to kind of skip the formalities. Like always, guys, like, subscribe, leave comments, please, especially today. But today we got a guy that has started so many different businesses. I want to kind of jump right in and not waste too much more time. So Jack Gibson, Jack, how are you?
Good, PJ. Thanks for having me on. Pleasure to be here.
Awesome. I'm excited. So, Jack, first of all, that's a really cool name. That's like a movie star level name. Like,
I never
Jack
looked at
Gibson,
it like that, but
starring
yeah.
Jack Gibson.
Well, my legal name is John, but because I'm the fourth John in a row, every other is John, Jack. So that's how it all plays out. Nobody ever understands why are you John, but you go by Jack. It's a
very cool name, and
yeah.
That when I make the thumbnail for this podcast, I will do something with that because that's really
right.
that's a really cool name. All right, so Jack, dude, you got so many things, so many businesses you started. Let's just do a real quick Cliff Notes version of your background, and then we'll jump right in.
Yeah, I kind of have the rich dad, poor dad scenario. I had my real dad, who was an amazing influence. He was a professional, always had a job, and he did an arson investigation for State Farm. So that's where somebody burns down their house or building or business, like he's got to prove they did it or did not do it on purpose. And he was great at that. And then I had my wealthy uncle who was an entrepreneur, right? And he didn't have any kids of his own. So he was like my second father. And I was always on his farm growing up. So I was around him, maybe more than my real dad. And he had 3 businesses, and he was always figuring out ways to make additional streams of money. He was he was overly frugal to a fault, right? I mean, when he passed, his bedroom had wallpaper that was collapsing down, like it was nuts, right? So they taught me though, how to build multiple businesses, have multiple streams of cash flow, and taught me how to be frugal and create more investable dollars. But also I realized the extremes I did not want to go to. I remember really vividly when I was a senior in high school, the Cleveland Indians made the World Series against the Atlanta Braves, right? And I grew up in Ohio. I loved Indians. Now, unfortunately, the Guardians. And, I say, hey, I call him up and I'm like, because he's a huge Indians fan. I'm like, hey, you want to go to the World Series? I got a couple tickets, $350, $400 each.
Nice.
And I was willing to shell it out. That's probably 1/4 of my total net worth, or probably
to the millionaire,
right? Yeah. And he's sitting on probably stacking multiple millions. And he's like, no, I can't go. I don't want to part with my money. And I'm like, you can't take it with you, right? So, there's great lessons to learn from people of what to do and then also what not to do. And so that was kind of my start in entrepreneurialism, is just being in that environment.
Yeah, sure. So now when you kind of progressed from there in college, you started a business as well.
Mm-hmm.
Kind of tell us a little bit about that. I know, the version you can tell us about the nutrition company you were working with.
Yeah. I was sitting in my dorm room one day, playing video games, wasting time like college kids do. And a kid came in, or he came around, he was handing out flyers about a nutrition product that his parents had just lost 30, 40 pounds each with. And he was very excited about the opportunity to make money. And so he shared the whole deal with me, and reluctantly, I took a look. I went to the meeting and saw the whole deal and the plan. And I'm like, wow, I could create some really nice income here, part-time from my dorm. So I started doing that, built that up pretty nice. I saved up 50 grand, we call it, the side hustle money. this was around 2000. I got really excited to turn that 50 into, millions. And in the stock market, tech stocks have been cranking for the last several years.
Oh man.
So I popped the 50 grand in. This is the 2000. I think you know where I'm going with this. We had what's called the dot-com bubble crash. Within like 4 months, I mean, half my money's gone. And I'm like, what just happened? Like, I could have had some incredible parties with this 50 grand, versus I just totally lost half of it within such a short period of time. So, that was my start in investing and my initial early successes with that. And then, I've been doing that business that's going on 25 years. So that's still a very strong business. But as an entrepreneur, I just had the bug. I want to start other things and, try some other things, test myself, challenge myself, try to figure out like, what's my limitations? How far can I go in other businesses? So about 6 years ago, opportunity kind of fell into my lap. I was looking to get into real estate and learn how to invest into real estate. So I started looking at turnkey real estate, which is where somebody else does all the heavy lifting for you in terms of acquiring a property, rehabbing the property, getting a tenant place. So you're buying a cash flow producing asset. So I started buying up, got incredible returns. And then I had a pretty established network by that point of people that knew, liked, and trusted me. So I started selling and referring people to this turnkey provider and getting commissions. And then it turned into like, wow, I actually have a real business. I can scale this business. There's huge demand for what we're doing.
Yeah.
And so I brought in a business partner, figured 50% of a much bigger pie is better than 100% of what I do on my own.
Absolutely. Everybody listen to that too.
Yeah.
To that. You don't need to be the guy all the time.
No, I think, if you bring in a good partner, and that's what my billionaire friend, Sean, told me. He's got $1 billion company. He said, you got to have great partners if you want to scale. So I'm like, okay. So we've been building that company out the last 6 years. And, it's been some incredible years and there's been some tough years in there too. So it's a pretty common theme, I think, with having any type of entrepreneurial background, right?
Absolutely. So initially you started buying turnkey rentals. You were just kind of accumulating turnkey rentals over and over from a different distributor. And then you're like, you know what, I'm going to do this myself. So Are you buying then kind of like distressed properties, cleaning them up, putting everything? Are you putting in a tenant as well? Kind of like what can somebody expect if they're trying to work with you right now?
Well, yeah, that company is called High Return Real Estate. And, we've really done a big pivot over the last 6 months. We were mainly in, C, B class properties that, took a little bit tougher areas, but also had a really good shot of appreciating. We try to buy in areas where there is potential for gentrification, as well as the cash flow yields that you get from just, renting out the property. But, those margins are getting really squeezed because, as we're all aware, right, the real estate market has, really popped, but the rents have not increased proportionally to the valuations. So we just started to find that it was really, really tight when you buy a property with a long-term tenant, that you're probably going to experience at some point a time where something breaks in the property and all your cash flow yields that you have accumulated as profit are now going back into the property to fix it up, right? And it's not really that hard to figure out. We all live in a house. We all know how much stuff breaks. Even this is our dream house we're in. This is a very nice house. But I mean, the stuff that we've had to pay for stuff that has broken down over the last 5 years, I mean, it's a huge bill. So this is it's an asset. It's a liability, not an asset. Absolutely. Right? So what we started seeing, the trending and the cash flow yields for short-term and medium-term, even tenants through Airbnb, VRBO, and then leasing to corporate tenants, that are there on short-term type 3 to 6 month stays. Those yields are, in a lot of cases, the rents that you get per month are 3 to 4 times what you would get from a long-term tenant. So my partner kind of proved it out with his own property, and we've had a couple that have done very, very well. So we're just right now just kind of converting over and scaling up this model of, more hybrid turnkey, where you're buying up a property and then the investor funds the rehab to get it to completion.
Okay.
And then our preferred management partner comes in once it's done, and they stage it with all the furniture that you need. So we take care of all of that for the investor, and then they lease it up and manage all the short-term rentals, that comes in. Now it's a lot more management intense. So you pay a higher management fee, but you also have a lot more yields coming in. I mean, when you have tenants coming in and out every 3 days or even day, it's just it's a lot more management intensive. So unless you want to do that yourself, you get a management company and they take care of it.
Yeah.
And so we're, this has been in the works, and the last 6 months, we've just been building this out, and very excited for what it's going to do for our own portfolio and, for investors as well.
Absolutely. So are you managing it then in-house? Is this an in-house company that's managing it, or are you outsourcing that as well?
It's an in-house company. Yes. So we don't really want to promote that, but I'll answer your question truthfully, of course, right? But we don't want
we can always edit this out. Don't worry.
No, you're fine. It's not a big deal. But we don't want like an investor to come back at us and be like, well, this is all your fault because you sold us this property, and then you're also the management.
Yeah.
Look, bottom line is problems are going to happen in real estate when it's not a smooth sailing. It never will be. And so anybody that comes into it with that kind of like pie in the sky mentality, you'll soon be hit with a dose of reality when things don't go work according to plan. So we definitely, though, we want to control that in post-sale experience for our investors as much as we possibly can, to give them a better, smoother ride as they will, versus if we throw them off to somebody else, we don't know how they're going to take care of them. And there's some really, really poor companies out there that do management.
Yeah. And if you guys are new to real estate, look into something like this, because this is when you buy a new property, it can be nerve-wracking. It can be really scary. You're like, first of all, a lot of guys like me, I live in Denver. I'm not buying a ton of houses here in Denver.
No, it's too expensive, isn't it?
Absolutely. I mean, our median price is $700,000. So
sure,
you look, when you buy structures, you're looking out of state, maybe Southeast, Midwest, something like that. But it can be nerve-wracking because I'm not there every day. So to have a company not only kind of bring me in, show me a property, show me how to manage bring in a management company as well. That's huge, and that can help a lot, especially if you're brand new. So what markets are you guys in?
That's a great question. I was going to say the market selection is really important, because you want to get into markets that still have a decent what's called the price to rent ratio, which is really simple. It's, you look at what's the total price that I'm all in on that property for, including rehab, and then what's it renting for. And typically in long-term hold rental real estate, if you're hitting 1% price to rent ratio, so if the property, you bought it for $100,000 and it's getting $1,000 a month in rent, that's 1%, right? That's typically the benchmark of where you're pretty safe and you're going to cash flow that property. Now, and what we're seeing is in short term and medium term, as much as 3% price to rent ratio, or even 4%. So that just creates so much more margins of cushion in your monthly profitability on that property, that you can then withstand and still be cash flow positive if a roof or something goes out on the property. Now, if you've just rehabbed it, you're probably not looking at some big CapEx. We call it capital expenditure. That's the big items, the roof and the electrical and the plumbing and the foundation, right? You're not looking at that for probably years out if the rehab's been done well. Mm-hmm. But you're always going to see a host of maintenance issues. Things are going to break. So you got to have enough yield of the rents coming in to be able to cover all that stuff. And look, we all want, as we buy and do investments, we want to have our cake and eat it too, right? We want cash flow coming in that's positive, and then we also want the property to be increasing in value. So that's what we really look for. Midwest always markets is what we're in. Indianapolis, Nashville. We have properties in Birmingham. We are looking at other, markets as well, St. Louis, Illinois. So we're expanding into different markets that make sense.
So as far as the short terms go, in a place like Indianapolis, Birmingham, when I see short-term rentals, I see the Appalachia. I see a beach property. How are they still successful in a place like Indiana, Birmingham, St. Louis? Are you still able to do short terms there?
Yeah, I mean, one of my business partners is the very first Airbnb that kind of proved out that we've got something here. It's a few minutes from downtown Indy, so that's desirable. But I mean, it's really literally, it's either on the edge of the hood or it's actually in the hood. And I mean, he has gunshots, that he hears in the neighborhood occasionally. So the area that he's in is gentrifying. He did a really nice rehab. It's a very nice property. Like if you walked in, it's got historic woodwork and it just looks really cool, right? But still, it's not in the most desirable location. However, I mean, the thing is booked up from short-term rentals, and he gets he's getting triple what we would have gotten from a long-term tenant.
So competition wise, so we're getting 3 to 4 times rent versus the one. I still see a lot of people going to the long-term rental. Where would you say the competition is today, right now, short-term versus long-term, which is the more hot market?
That's a great question. I mean, you have more stability with a long-term tenant, right? You know that, when they sign a long-term lease, you don't know that they're not going to break it. But if you get a good quality tenant, right, generally speaking, they're going to, and there's predictability there. So that's the advantage, is the income consistency and predictability. There's always a demand for long-term tenants, especially with a tight supply. So I think as far as economically resilient, you're probably short or long-term leases are going to be more resilient to any type of downturn in the economy. Whereas, a lot of people that are doing short-term rentals, this is more of a fun pleasure trip. Sometimes it's a business trip, which is definitely, we want a mix of all of that type of demand. But short-term rentals, I think, it's definitely going to get more competitive. We're definitely seeing a lot more people entering the space. But if you do a great job with staging the property and providing a really good, quality experience, I mean, you're always going to have a demand. Your properties are going to be filled up.
Okay. All right. Let's shift gears just a little bit. You're also in self-storage. You have 2 different funds with self-storage. Talk a little bit about that.
Yeah, that's funny. It was 10 years ago. We're going down to Cabo on a trip that we earned through our direct sales company. And of course, the second year in a row, I forgot my passport. I mean, it's unbelievable, like the shit that I do. I mean, really, you don't have to be superiorly intelligent and not do dumb shit to grow businesses. But so yeah, the first year it was expired when I got to the airport, right? The second year we just forgot it, and my mom we raced to meet each other on the highway. I was driving back from the airport at 100 miles an hour, and then I just grabbed the passport from my mom. I couldn't get back in time, so we get there a day late and miss the first day, and in line is Sean. Checking in, and he forgot his passport too. But he was a baller. He had his buddy fly a private plane to him where he was at the airport, and get him his passport just in time. He made the trip, the flight, from Canada into Cabo. And I'm like, well, I want to be like you. What do you do? And he's like, well, I've got the self-storage real estate fund that I've been doing, and it's massively profitable. So we hit it off, kindred spirits, right?
Sure, absolutely.
And I've been investing with him for the last decade, and it is by far my favorite investment because it's the most passive in nature. I don't have to do anything. And the returns are consistently in the 25% annualized range. So, you're doubling your money every 4 years at 25%, right?
Wow.
So the only downside is, that the money, when you put into a fund like these, number one, it's not liquid. You can't get your money back out until the fund sells.
Yeah.
And the second part is that you have to be accredited to do a private placement deal like this. So accredited, you got to have $1 million in net worth or over 200,000 in annual income or 300K as a, married filing jointly. So, that's the downside. But if you can get yourself into those requirements, that opens up a huge a wave of opportunity to do higher plays in terms of less risk and bigger rewards. So
yeah.
I just decided, I had several friends that were asking me about it and colleagues and networks, and I put together a fund to invest into the store space, the self-storage fund that I'm in, and it's been incredible in terms the returns are just they're really, really strong. So yeah, that's that company. And then what else? Bitcoin mining.
You got all kinds of stuff. Real quick though, as far as being accredited, though, guys, if you're watching this and you're like, well, I don't have $1 million, I don't have anything really. So you kind of followed his path. Direct sales, rolled into real estate, rolled into bigger real estate, rolled into bigger real estate, right? So you don't necessarily don't think about starting at the end. Don't compare yourself to where Jack is today, or even where he was when he started the self-storage fund. Look at where he started early on. He found an opportunity and he just ran with it. Just find something that produces income that can get the ball rolling and just roll with it.
I couldn't agree more. If you look back to when I first started in my very first, business, when I started that, I was working on my uncle's farm, making $5 an hour, picking up sticks and clearing off farmland. Right.
Jeez.
It was terrible.
That's real work.
But you got to put the work in, and sometimes you got to get your hands dirty, right?
Mm-hmm. Absolutely.
Do things that you maybe don't want to do but having the vision for the long-term picture of where you're actually headed.
Yeah, I think a lot of times people see the Instagram stuff, like the guy with the jet and the Lamborghini and stuff, and they're like, well, how do I get there really fast? It's not going to be really fast. It's just never going to be really. You can get there. You can absolutely get there. Yeah. But you have to do step 1 and step 2, and maybe you'll kill it on step 2 and you'll skip step 3 and hit step 4. But it ain't going to be some big jump from gas station employee to private jets. You got to work. You got to find vehicles and work those vehicles.
Exactly. And, I like incremental growth, PJ. A lot of people are looking for big, gigantic jumps in, their income or in their wealth. And I feel like that's great if you can make that happen. I love those success stories. They're inspiring. Those are the exception to the rule, not the norm. The norm of entrepreneurship is this, steady plodding and this steady, incremental, consistent growth. And that's the kind of growth that most of us can handle in terms of being able to handle with your ego and with your pride and with your heart, and just making sure that, when you do have a big jump in income or a windfall or a big growth, right? Most humans that I know, especially younger, they're not equipped to be able to handle that. So then they end up ultimately either self-sabotaging it or something sabotages it, the universe, God, energy, whatever you want to call it, because you're not the type of person that is cut out to handle that type without it really hurting you over the long term. So I don't think you should desire to have wealth fast and wealth quickly. It's not in your best interest. Now, I'm sure most people, what I just said, they don't want to hear that. They don't want to listen. I understand, but that's the way it works.
Absolutely. Okay. So Bitcoin mining, direct sales, real estate, self-storage, and now Bitcoin mining.
Sure.
Where did that start? How'd you come up with that idea?
Well, I love crypto. I love what it represents. I love Bitcoin as a disruptive, decentralized form of money that the governments cannot debase or control. And obviously, we could go on to, this is an entirely different episode that could go on for a long time, right? We could look at all the ways that the government is, manipulating and everything they're doing to our money supply. I mean, it's pretty, can't really argue it when you look at the numbers. Whereas with, cryptocurrency, they don't have that control. They can't do the things that they can do to the dollar. So I love that. I think that it's the future. I think that most of the things that, you and I are going to be conducting in business and transactions will happen over the blockchain in the next 5 to 10 years. So I just kind of missed the boat a little bit in terms of, I didn't get in early enough.
Yeah.
I bought my first Bitcoin back in like 2016. And, I just kind of, I don't know, I just kind of sat on it. And then I sold off part of it. Right. And then, so I didn't get in early enough.
Sure.
And so what Bitcoin mining allows you to do is to get in kind of like earlier over a longer period of time, meaning that you can get in cheaper than what the current price of the Bitcoin is if you were just to go out on the market and buy it. If you're mining and you have a long-term patient view, then over that course of time, you could get your Bitcoin, say at 20,000 instead of 30,000 or 50 or 60 or wherever this, the spot market price is. So my buddy Adam, we've done several technology products together. He's built some software platforms for me, and I saw him. He's been mining Bitcoin for a while, and so I just I messaged him like, hey man, I'm just throwing this out there, but if you want me to put some capital up, I'll put the money up. You do all the technical stuff that you know how to do. I don't know how to do any of that, and I just know I want more Bitcoin. I want more Ethereum. That's all I know. And I want it at a cheaper price. So he's like, cool. Yeah. So then we started buying up Ethereum mining equipment. So we've been mining that for a year and a half. I think Bitcoin mining, this is the thing, right? I was supposed to be plugged in back in January, and we're in June now, and we're still not plugged in. So this is the problem with entrepreneurial activity and things. There's always, not always, but a lot of times there's delays and there's things that happen that, maybe you didn't project, you couldn't figure out, downside risks that you didn't see. But we didn't know that the supply chain for the things that we needed to produce power for our machines was going to be so difficult to get. Transformers, panels for our containers, all this stuff is like locked down.
Why is that?
It's locked down in China.
Okay.
They've been locked down for 2 months, and even before then, we had supply chain disruptions as well. So we're experiencing that. Hey, we cannot get the parts in a timely fashion at what we need to power all the mining rigs. So yeah, as of right now, the machines are sitting there just waiting to be plugged in, and it's super frustrating.
Yeah.
But as soon as I have them plugged in and cranking, I'll have space to bring on 400 more machines, and a bunch of new investors that want to do it. But until that happens, it's just called wait patiently, which I don't really do well.
Hurry up and wait.
Yeah, hurry up and wait. It's terrible. It's terrible because entrepreneurs, we're not built to be patient.
No, not at all.
We're not built to wait. We hate waiting. It drives us mad. We want aggressive action. That's how you're successful as an entrepreneur, is that you're just like taking stabs every day, aggressively trying to, cut your path through the forest. And it's really, really hurts when you're delayed and you can't help it.
Absolutely. Yeah. Even when things aren't going, I have to be moving forward. I have to be doing something to make money. And I told my wife, actually this morning, I said, yesterday was horrible. And she's like, why? I was like, I didn't make any money. I was like, I don't know. I didn't know even where to begin. I was like looking, moving, calling people, doing things. I didn't make anything. And she's like, yeah, I guess that's a bad thing. I'm like, that's a terrible thing. That's like the worst thing you can do as an entrepreneur is not progress in some direction.
Yeah.
But so I want to ask you.
Yeah, for sure.
Right.
This happens. You're going to see lulls in your businesses or business. It's it's just inevitable where there's just down periods where, you're putting the work and the effort and energy in, but you're not seeing, for whatever reason, you just haven't caught your momentum yet, or you're developing a new product line, or you're totally revamping what you're doing because you want to kind of take things in a different direction, and maybe you got burned out, so you got a lull from that. There's all kinds of things that will happen that will kind of almost pump the brakes on what you're doing. And those they really suck, like you're saying, but they're also, I think they're really good for us too, because it can try to maybe help us get a little bit more grounded, centered, and like realizing too, like, okay, there's more important things in life, more bigger priorities than making money. I mean, we don't usually like to admit that there's more important things, right? But there are plenty of more important things.
Looking around, the grass is 3 feet tall. The kids are like, Dad, what are we doing?
Right.
I got to do something.
I got to go to practice. I'm making money.
You're like, well, I haven't made money though.
Yeah.
All right. I'll take you to practice. But real quick, as far as like Bitcoin, as far as all the coins out there. So I bought Bitcoin, I bought Ethereum, I bought all these other little coins, right?
Yep.
Where do you see the future going? And I'll just tell you, my account, everything crashed since
you're
December.
Down quite a bit, aren't you? When did you buy in?
I started last September, October, something like that. I bought, everything went boom, shot way up.
Right.
And now it's crashed. What do you see as the future of these altcoins and as well Bitcoin and Ethereum?
Yeah, I mean, I tell anybody that is experiencing the same thing, I just say absolutely, unequivocally, you hold, and because 5 years from now, this is going to be a blip on your financial radar. Like if we were to fast forward, get into a time machine, we go forward 5 years, and we talk to you, you're going to say, and undoubtedly, you're just going to say, oh, that crash back in 2022. Yeah. I mean, I don't even care. It was a blip, because now where I'm at today is incredible. Okay. Yeah. But here's what I tell people about crypto. Volatility is the price that you have to pay for outsized gains. So if you want a safe and steady 3-4%, go get bonds, buy, whole life, high cash value insurance. You get your basic stable type plays. If you want to get a little bit more risk, but get better returns, you get, cash flow real estate, get some index funds. If you want to get high risk, high returns, get early stage companies, tech stocks, and crypto. It's still in very early stages. Yeah. So anytime anything's in the early stages, it has a lot more up and down price movement, because it's just they're more speculation too. I mean, intense speculation in the early stages. So you're going to see these 80%, 50%, 60% drawdowns that are gut wrenching. If you can hold, then you're going to be very happy. So here's basics of really quick, what a great an average and a poor investor does when their assets drop. Okay. So a poor investor panic sells. So that was me in 2000. I had no idea what I bought. I was buying based on past performance. I didn't know what companies or what investments I was in. I was just buying something because my financial advisor said to. So when it dropped, I was a poor investor. I panic sold them off, and I probably had Amazon in that basket of stocks, right?
That's.com.
Yeah. Right. Probably that was in there too. So then an average investor, they hold, and they just patiently wait through any down drops. And then a great investor, they buy more, because they know that the value has not changed of what they bought. It's the temporary price action or the perceived value from other irrational investors has caused it to drop. So they buy more and double down to drop their average cost per investment or per coin or whatever you're in, and knowing that, and having faith and confidence in that they're buying a great quality asset that has a lot of long-term growth potential. So if anything, you just hold right now, and if you can, you should be adding more to those positions, because they're really at incredible prices right now.
Would you say Bitcoin and Ethereum are going to maybe outlast these smaller coins, or do you think everything's going to catch back up and be great in 5 years?
Yeah, I mean, certainly there's absolutely nothing wrong with just loading up your portfolio on Bitcoin and Ethereum, especially at today's prices. They are long-term assets. I consider Ethereum to be one of the greatest assets in a decade from now. It'll probably be more valuable than Apple.
Wow.
I
Wow.
mean, there's thousands of apps, decentralized apps that are being built on top of the Ethereum network. It just has so many use cases of real life, real world application. Almost all the NFTs, the non-fungible tokens, that market's exploding. All that's happening, not all of it, but most of it's happening in the Ethereum blockchain. And then, yeah, but I do think, personally, I think an exposure, a small exposure to a nice basket of altcoins is very, very smart, especially at today's prices.
Yeah.
These are the ones, whenever Bitcoin and Ethereum go up, altcoins go up even more. So they slingshot past Bitcoin and Ethereum. Now, it's also true the reverse. Bitcoin and Ethereum drop, altcoins drop even more. So there's a lot more risk. So a great portfolio, in my opinion, is like, you got 20 to 35% of Ethereum and 35% of Bitcoin. And then the rest is in the alts. And you've got it spread out amongst your top 10 to 20 favorite alts. Position size your bets, meaning you put the same amount into each altcoin bet. And, out of 20 altcoins you get, I don't know, 10 of them probably won't be here in 5 years, and 5 of them will probably just be okay. And then there'll be a few of them that'll be world-class projects that are adopted by, millions of people. So those are the ones that are going to far make up for any of the other losses that you experience in the rest of the altcoin portfolio.
Yeah, thank you for saying that, because I think a lot of people are very confused right now, especially they aren't Bitcoin experts. They got into Bitcoin because everyone said, get into Bitcoin, get into crypto, and then it crashed. And now they're like, what do I do? I have no idea even what I'm doing to begin with. So that helps a ton.
Yeah. And that there was a ton of people that had no idea what they were buying. They didn't understand it at all. I still don't. I mean, I understand it. I mean, you can tell from me speaking, I understand it, but I don't truly understand like a lot of the technical kind of in the weeds sort of things about it. But that if you really want to understand it, there's a book, it's called The Bitcoin Standard. I think everybody must read it if you're going to get into the crypto space, because once you read that book will really help you understand why Bitcoin is going to be, one of the most valuable assets along with Ethereum, in 5-10 years from now. It's going to be, my projection is 500,000 per coin is in Bitcoin within the next 5 years, probably 10 at the most.
Wow.
Mm-hmm.
All right. So, Jack, you have real estate, Bitcoin, self-storage, you have all this stuff. And now you're helping people kind of learn, basically build their own businesses on the side. You're coaching them, correct?
Yeah.
Indestructible Wealth.
Absolutely. Yep. In Indestructible Wealth, I realized, during the pandemic lockdown, I went through some really, really tough personal stuff. Some of it, just deserved to help me to, become a better man. And then some of it was just super unfortunate type thing. And so I took a solid year off almost. I mean, I didn't just go into a, dark hole and not communicate with anybody, but I didn't work very much. I just golfed and played with the kids. And in that time, I realized most of my life I've been what I call on the first mountain. There's the first mountain is where you're chasing success and achievement and money and external things, which is awesome and nothing wrong with that. And I still do that, and I'm still going to do that for the rest of my life because it's fun. But the second mountain is the fulfillment mountain. And this is where you have something type of maybe a crisis or something that happens that kind of transforms you from the first mountain, changes your perspective. and catapults you or plucks you off the first, sends you off onto the second. And the second is based on fulfillment. This is based on how can you make your mark on humanity and help other people and specifically help other humans transform their lives. And so I said, okay, what is it that I'm skilled enough that I could help transform, help people to learn, educate, and move them into a different way of being and thinking? Well, finances. Like, I think I still have a lot to learn, but I've done pretty well there. I mean, we have 21 different streams of income, 5 different companies, but lots of passive income opportunities. And so I was like, okay, let me teach this and let me help mentor the younger generation. So that's where Indestructible Wealth came out. I mean, I just finally created products. I haven't made any revenue. I launched it a year ago. I wasn't in a rush to create revenue, which is a great position to be in.
Sure.
And again, if you're just getting started in business, you don't want to wait a year to try to sell something. That's a terrible play. You won't make it unless you have a lot of other things bringing income in, right? But it just gave me a chance to kind of build it out the way I wanted to build it out without worrying about, okay, I got to make sales. So finally, like as of today, even my book is launching. I have 2 courses that are financial education are coming out. Book is called Building Indestructible Wealth. This first release is designed for 6-figure earners or those who have probably 6-figure 100K to or more to invest. I mean, if somebody's building towards that or approaching those type of numbers, then certainly they're going to get something out of it. But it's a book designed for action. Like, okay, here's the conceptual strategy. Yes. But we don't stop there. We actually go into multiple assets of how to buy them, how to think about them, how to invest into them, where to go to learn or how to access them specifically. Like I give links to lots of where to go to mine Bitcoin, where do you go to do self-storage, where do you go to write stock options, where do you get the specific teachings that you need to be able to implement all the things that I'm showing you in the book. It's one thing, I think, okay, I just teach you out of theory or show you something, but if you walk away from that and you're like, I have no idea how I go about actually in implementation, then, that's typically a big gaping hole, I think, in a lot of, training, right? Absolutely. So it's all about creating multiple streams of passive income from various assets and stocks, crypto and real estate. And then of course, in your own private business, and then taking those streams of income. And then that's what you speculate with. That's what you buy your crypto altcoins. That's what you buy your tech stocks with. That's what you buy your early stage, pre-IPO private placement type company that, can create some incredible gains of 100x or more, but more risky. You don't want your portfolio and your livelihood to be built upon those foundational plays. You want a solid stream of safe income as your foundation. Then play with house money. You got all these streams of income coming in. You're de-risking yourself. So now if those things don't work out, your crypto crashes, your early stage company just totally bombs out and it doesn't work out. Okay. It hurts, but my income's going to be replenished in a month, 2-3 months. It's no problem. I'll just swing again in 3 months from now, and I'm all good.
Yeah. It's funny. I heard Mr. Wonderful from Shark Tank say the exact same thing the other day. He was on a different podcast. He was with Grant Cardone. He said the exact same thing. He's like, you only want to invest in you got to pay the bills somehow, right? So you don't want to use that money to be investing in all these speculative things like altcoins and things that may not work out. You want to use the cash flow from a business to invest in things like that. One thing I wanted to focus on too is, guys, if you're listening, hopefully you're listening. So Jack here is a coach, and there's a lot of coaches out there. So I get approached by coaches all the time. What Jack just told us is to start this podcast, he built this business. He did this investing endeavor. He did a lot of things to make himself qualified to coach. A lot of coaches aren't qualified. So, hey, if you get a new coach that wants to, sell you their product, say, okay, what did you do? If they don't give you the rundown like Jack just gave us, maybe they're not the right person to be helping you.
Yeah, I would definitely agree. I think there's a lot of people that are out there that, they've never proven out that they actually know what they're doing in terms of the specific thing that they're teaching other people. Now, there are people that, for example, there's some really great NBA coaches or college basketball coaches out there that are legendary, right? And they never even played college ball or played in the NBA. And maybe, they might have played high school ball, right? But they're coaching, they're exceptional coaches. Generally speaking, though, that's pretty much the exception. That's not the norm.
Definitely.
And so whenever I look at anybody that I want to learn from, I always ask myself one question: did they get a result in this area that I want?
Mm-hmm.
Now, if the answer is yes, then they passed the sniff test. That's all I really want to know. If the guy is a fitness guy and I'm a personal trainer, right? Like, the resume is, well, how do you look?
Yes.
That's kind of a little bit super.
Pretty easy resume there.
Yeah, it's an easy resume. You got somebody that says, oh, I'm an entrepreneurial coach. Okay, cool. Well, then, what businesses have you started and what experience do you have, right? Are you an investor? What investing experience do you have? How has it worked? And that's the thing too, as an investor, I lose money and stuff all the time, so then I'm like, man, am I qualified to be a financial education coach? Well, yes, of course, because losses are part of the investing experience. You cannot, no matter what you do, you can't circumvent them. Buffett's down a huge amount on his Apple purchase. He invested into Apple, rebought it, and it dropped even lower. Does that mean that he doesn't know what he's doing? I mean, he bought Kinney, I think it was Kinney shoes or something.
I remember.
And he lost like $5 billion on it or something. So just because we don't get everything right, that doesn't mean that you got to look at what's the whole body of work.
Yeah, absolutely. So, but like I always say about coaches, they're a cheat code to life. So you're bypassing those failures that they already went through and they can tell you about. The successes, the failures, you're getting years and years and years of experience given to you. So it's like a cheat code in like a video game. You get to move so much further along. You don't have to do it yourself. And I promise you, going through a business by yourself and failing and learning and failing and learning, it takes forever and it's frustrating. If you can get a guy like Jack to say, oh no, go left when you were going right, hey, it was worth the money.
I think of coaching as the great equalizer, in terms of, if I don't have the skills or the experience of somebody else that they're way ahead of me, I can close that gap by hiring a really great coach. Like, sure. They can help me equalize myself to other people that have a lot more skills or more experience. Our son, he's 12 years old. He got cut from the travel ball team 2 years ago. We were all really disappointed. I mean, sports are a big part of our family, including my wife is super competitive, and it hurt. And so we said, okay, what do we do? Well, we hired a coach. We got him pitching lessons with a professional player. And now he's the best in the rec league that he's in. Yeah. I mean, in 2 short years, he's been coaching every Wednesday for 30 minutes for the last 2 years straight. I don't think we've missed a week unless we're on a couple of vacations, right? And so that's the way you close the gap for any area of your life is coaching, in my opinion.
Absolutely. Sports, business, it's really all the same. If you find someone who's already been there and they can see where the errors in your game, they can see where you could get better, kind of where you're at now that you shouldn't be. It's priceless. It really is priceless. It's going to get you.
I have a coach in every area almost. I mean, like, my pastor is my spiritual coach, right? I've got my own business coaches. I have my own financial mentors. I have, I've gotten personal trainers in the past, especially when I needed, a boost or healthy dose of motivation, right? Yeah. So you definitely got to look at all areas of your life. And it's not like you want to take on a coach all at once on all areas. That'd be super expensive, but you want to be in the mindset, right, of, hey, who can I who can I leverage off of that has the skills and experience that can help me pull my own skills and experience up, and catapult me ahead, 5 years.
Yeah. Absolutely. All right, Jack, where can people find you?
Well, the best place where everything is located is myindestructiblewealth.com. I have all my blogs, my podcast. They can book a call if they want to, do a strategy session for their financial education and they're building a wealth building strategy. And then also my book that's launching today. And then the 2 courses that I have, the basic and the advanced Indestructible Wealth Builder. Those are, I think, 6 to 8 hours of video content in each course. Very, very loaded up with plenty of info that will, certainly stretch your skills and mindset. Those are all on that site as well. And then, of course, I'm on Instagram. I'm cranking out the Instagram reels right now. So,
nice.
Got to keep delivering value, right?
Absolutely.
That's the only way I'm going to grow an audience is just pumping out 10 times more value than I'm asking for in return.
I've been told I got to do TikTok.
Well, TikTok, I have a whole 76 followers. TikTok's been not so friendly to me, but we're still plugging away. I mean, the great thing about it is that you can repurpose your, reels, Instagram reel videos into TikTok. And so you might as well just do both at the same time if you're going to do them, because you can use the same videos for both. But I'm not very good at TikTok. Those are frustrating.
Yeah, my kids are experts at TikTok.
Of course.
Yeah, I'm not even. They actually get paid to be on TikTok,
right?
For their content. I'm like, how do you do that? I want to do that.
Yeah, I mean, they do. That's the sad part about it is they know more about these, digital tools and assets than what we do. But that's great. They'll teach us, and that's fine.
Let's have built-in coaches in the house too. Like, Dad, your video looks stupid. Like, oh, well, what do I do? Help 100%. Me. All right, guys, buy Indestructible, building indestructible wealth today. Jack, big question we finish off every podcast with. Are you ready?
I'm ready.
All right, here we go.
Do it. Hope it's not too hard.
It's very easy. We're LandLife. We buy and sell vacant land, dirt, trees. If you could buy land anywhere in the whole world, where would it be and why?
Okay, vacant land or
vacant land. You could build on it. I mean, whatever you want to do with it, but yes, vacant land.
Well, okay. So from a purely like the most valuable real estate in the world, right? I would like to have it in New York City.
Sure.
I don't think too much more goes for more per inch than that, right? Or per square foot. Maybe Tokyo. Those are probably the top 2, right? But purely from a lifestyle and point of view, like, hey, we want to live an extraordinary quality of life. Yeah. We would have a nice 100 acre, or not 100 acre, that's a lot, 100 foot of lake frontage on an inland Michigan lake. And that would be the most incredible thing for our family. Or, I know I'm giving you a second answer.
No, give as many as you want.
Okay, so the other thing is there's mountain range in northern Michigan. I mean, it's not a Colorado skiing experience, but our family, it's 4-hour drive and it's very accessible. It's called Boyne Mountain, and we would buy a plot of land on that mountain so we could ski in, ski out, build on it, golf during the summer. Like that would be incredible too. Yeah. So I'm a pretty conservative investor. So I feel like I got to stockpile some more cash before I do something like that.
Yeah. Okay. The mountains of Michigan and then lakefront on one of the interior Michigan lakes.
Absolutely. And those are valuable, very valuable pieces of real estate that will hold their values for decades to come.
I can imagine. Yeah. Hey, Jack, anything else you want to say before we wrap up?
I so appreciate you having me on your show. I mean, great interview. So thank you. And I hope I served your audience more than anything. So
dude, I think they learned a ton of stuff. So
awesome.
And like I told you before, that everything you said is kind of what we're trying to teach people, show people that didn't know it existed before. So, I think you have a lot of great information. And guys, if you want to kind of further that and, grow even more, contact Jack for some wealth coaching. But
I do have in one final piece of advice in closing. I think entrepreneurs got to understand that it's completely normal to experience some real gut-wrenching, really hard, difficult times.
Yes.
And this is why you're paid the big bucks. Entrepreneurs are the highest paid profession in the entire world. Okay. So in order to get to that point where you get that kind of 10x the amount of pay, or 100x the amount of pay for the hours that you're actually putting in, you have to go through stage one, which is you're putting in 10 units of work and you're getting 1 unit of pay. And that could go on for a year, 2, 3, I don't know how long. But you have to be able to have the vision to work yourself through that. And it is challenging, it's difficult, but this is what you're going to get paid and rewarded so handsomely from the marketplace for being able to endure.
Absolutely. That's awesome. All right, guys, don't forget, like, subscribe, leave comments, and contact Jack, buy the book. Guys, until next time, I'll see you on LandLife.